All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. The first thing I want to talk about is Three Arrows Capital falls into liquidation after crypto crash. This is happening a lot with crypto recently, particularly after all of these crypto banks started coming along, like Celsius and Crypto.com and things like that, with all these leveraged crypto loans. As soon as the price of crypto starts falling, all of those loans start coming back to haunt everybody, and everybody falls into liquidation. Not only that, of course, this is the margin trading and things like that also liquidate people, particularly once Ethereum falls to like $800. We're going to see a lot of liquidations, and then once it falls to like some $300, if it happens, we're going to see a lot of liquidations, and that's probably where the bottom would be, because the liquidations would end up, all of the leverage would sort of run out, all of the shorts would run out at that point, and then there really wouldn't be anywhere left to go but up, in my opinion. But the liquidations would be something extreme if Ethereum fell, I think, below like $500. But Three Arrows Capital is the first major one to fall. I think Celsius is probably the first one, but they just really haven't admitted it yet. Three Arrows Capital plunged deeper into financial turmoil Wednesday after a court in the British Virgin Islands ordered the crypto-focused hedge fund into liquidation following its failure to repay creditors. Of the value of Bitcoin and other cryptos have nosedived. The liquidation order comes after a high-profile notice of default. On Monday, crypto broker Voyager Digital announced that Three Arrows Capital had not made the required payments on a loan worth more than $665 million, paid partly in Bitcoin. Two senior members of the global advisory firm Teneo have been appointed by the court to help manage the liquidation, according to a person familiar with the matter who spoke on the condition of anonymity because they were not authorized to publicly discuss the process. Of course they're not. So the escalating financial turbulence marks the latest setback for the crypto industry, faced with collapsed token prices, abrupt layoffs, emboldened critics, and high inflation economy that has compelled the Federal Reserve to aggressively raise interest rates. This is from the Washington Post, from the American perspective. The sector is in the grips of harsh crypto winter. So it was created in 2012 by Sue Zhu and Kyle Davies, and they are effectively wrecked at the moment. And so is Celsius, as well as BlockFi being acquired by FTX for up to $240 million. BlockFi not doing too well either. In case you guys don't know what BlockFi is, you kind of go there, you can get a credit card, you can get crypto-backed leverage loans, that sort of thing. Sort of similar to Celsius, kind of similar to Crypto.com. And again, the problem with these is that you're using crypto to get a loan, and then while you have that loan out, if the price of crypto tanks, you're margin called effectively on your loans, and that is what is happening right now. And then everybody has to bank run on all of these platforms, and there just isn't enough crypto to go around, because you're giving these high leverage loans out at $60,000-$70,000 Bitcoin, and then when Bitcoin is now $20,000, there just simply isn't enough. Another problem I've been seeing with these loans is that they're trying to use this fractional banking system with cryptocurrency, and that doesn't work with cryptocurrency. It works with fiat. It does not work with crypto, because crypto has a set amount of Bitcoin, or a set amount of, at least currently, set amount of Ethereum, and this, that, and the other thing. There's 18 million Bitcoin, or there's 110 million Ethereum out, whereas the banking system works if a bank has $10,000 and you go in there and you get a loan, the Federal Reserve gives them more money because they can lend out way more money than they have, and that creates more money, and yada, 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 and it stimulates the economy, and it's supposed to only be a couple percent inflation, et cetera, et cetera. It's supposed to be inflationary. It's supposed to expand as people go out and get loans. The problem is that people are going out and getting these loans, and these platforms like Celsius and Crypto.com and BlockFi are giving people these incredible amounts of interest, including DeFi platforms, and giving these people incredible amounts of interest for putting their collateral on these platforms. But that interest has to come from somewhere, and eventually, when there's a big bank run on it, there's no way that there's enough crypto on these platforms to give these people the interest. It's not the fiat system where you can just poof it into existence and then give it to the people. It just doesn't work like that, and these developers are trying to force these crypto essentially fractional reserve system banks into crypto, and it's just not working. Especially what you can see when it works if the price of crypto is very high, and as soon as crypto crashes, which it always does, like once a year, twice once every 2 years, and it just doesn't work. So BlockFi will also receive a $400 million rolling credit facility from FTX. So BlockFi has agreed to an acquisition deal with FTX.us. I've never actually used FTX. I think I get like an email from FTX like every week trying to get me to like shill them. But I've never actually used FTX. The crypto lender's CEO, Zach Prince, took to Twitter Friday to announce the update, revealing that FTX.us would be buying the firm for up to $240 million based on certain performance triggers. Prince added that BlockFi would receive $400 million rolling credit facility. It was previously revealed on June 21st that FTX had offered BlockFi a $250 million credit line. The $240 million price tag marks a heavy discount from BlockFi's previous valuation because they got wrecked because of the crypto market. The firm was valued at $4.8 billion, not anymore, after it raised funds in a private round in July 2021. I really don't need to continue the article. Again, BlockFi wrecked, and the users kind of need saved by FTX now. And then moving on to yet more wrecking, but kind of a good thing. I suppose kind of a good thing, not only for crypto miners in a way, but also for gamers. Gamers rejoice as crypto winter tanks GPU prices, especially considering Ethereum is sooner or later here. It just keeps getting the can kicked down the road. Sooner or later here, I'm just going to kind of do one of these because nobody knows the date. I don't even think the Ethereum developers know the date of when proof of work is actually going to end with Ethereum. But eventually it is going to end, and I don't think miners are really eager to expand their operation, knowing that it is going to end possibly before they get their ROI of the new GPUs that they would use to expand their operation. So everyone is sort of selling off their GPUs in preparation, or at least if they're not selling them off, they're not buying more GPUs to expand their operation. Therefore, the additional GPUs being put on the market by NVIDIA and AMD are not being bought up by miners at the moment. For once in the past several years, graphics cards are becoming more affordable for their intended purpose. GPUs used for mining, things such as Ethereum, have plummeted in value in the secondary market over the past 6 months. One, the prices of crypto are falling. Nobody's buying them to continue mining. Again, two, as I just stated, Ethereum eventually is going to end proof of work, and nobody's going to be buying additional GPUs to mine Ethereum, knowing that that's going to happen, not knowing if you're going to finish your ROI on them. So according to completed listings data compiled from eBay, the latest models of NVIDIA's RTX 3000 series and AMD's 6000 series have seen their prices drop 50% since the start of the year. In January, an RTX 3060 Ti, one of the most efficient consumer-grade cards for mining Ethereum, typically set buyers back upwards of $1,000. Now the same card trades hands on eBay for $492. Secondary sales of other cards show similar trends. RTX 3070s and AMD RX 6800 XTs have registered over 50% declines in recent months. Additionally, more powerful cards such as RTX 3080 and 3090 models show larger discounts compared to their more mining efficient counterparts. The RTX 3090, until recently the most powerful card in the RTX series, has seen the most significant drop in price, recently selling for $2,788 in January, down to an average of about $1,100 today. So this is a good opportunity in case you are thinking about mining. Now, I wouldn't really think about mining Ethereum necessarily. You could mine Ethereum until the day proof of work ends. There are some other options to mine, Ravencoin and some various others as well. I wouldn't be going 3090 or 3080 necessarily to mine. They're typically too expensive, too power hungry. Again, I agree with the article. 3060s are usually good. The 2060s were better. The 1060s were typically better. In my opinion, AMD was typically best for mining. AMDs were better at memory intensive algorithms, whereas NVIDIA typically had more cores, so they were better at core intensive algorithms. And if you didn't know what you were mining, you should probably look into that, whether it was a memory intensive algorithm or a core intensive algorithm. But NVIDIA was typically better at the latter. However, AMD cards were just cheaper, and so you could just bulk them up, and it was just easier to mine with AMD in general. But yep, so that's easier. So another thing that's dumping in price too, and this is a little concerning because I feel like with the lowering hash rate, we'll show the hash rate here of Bitcoin here. And it is dumping just a little bit. You can see it's kind of tapering off, but it's dumping a little bit. We went under 200 million terahash a second here. And this is because with the price of miners, with the price of Bitcoin tanking, I think a lot of miners are shutting off their less efficient machines. So, the S19 miners and up are probably still mining. But, a lot of mining operations have a mixed bag of miners, so they probably used to have like old S15 or S17 miners in the back still mining. And they have their S19s up front mining away. And when prices go low, you would want to shut off your S17, S15 miners type thing. The older variants you would want to shut off because they are less efficient, and that would lower the overall hash rate. And so that's going to be kind of a problem. And a lot of these miners too are loaned or leased kind of miners. So a lot of these miners you're going to see on the third party websites here pretty soon. A lot of these are going to be sold with Bitcoin struggling to be over $20,000, and with the hash rate so high at the moment, only $20,000 is really not so good. You're going to need some extremely efficient machines and an extremely efficient operation to be very profitable at the moment with Bitcoin. So a lot of miners are going to have to capitulate here. That's going to lower the hash rate, and if we have a sudden lowering of hash rate, that's going to mess up the transactions for a little bit, and it could cause a sell-off of Bitcoin, a lowering sentiment about Bitcoin, and of course continuing the bear market even more. But I wanted to show you here the they have some better models here. They got the Hydro model out now, which is pretty sick looking, 198 terahash. That's $15,000, but we're not really looking at that. I want to look at the S19 Pro. This is $5,940. So it sounds kind of expensive, but this was once like $10,000 if I recall. And I started looking around online, and I happened to come across this video, and I actually didn't watch this video at all. Just for the title of the video, Bitcoin mining with the Antminer S19 Pro for $11,000. Price in 2022. Is it still profitable? Question mark. I don't know if this guy is a great YouTuber or not. Thank you for your title and video I guess. But it was January 11th, 2022. So just like 5-6 months ago. And it was $11,000, and all of a sudden now it's less. It's about half of that. It's $6,000. So you can see that there's obviously this huge sell-off going on right now, and that's just furthering the bear market, plain and simple. But moving on here, a little bit of dip buying. We had MicroStrategy, of course, buy the dip. I didn't put that article up right now, but that's not too hard for you guys to find. MicroStrategy, of course, bought the dip. I don't remember how much Bitcoin they actually bought, but they bought it at like $20,000, which isn't surprising at all because MicroStrategy is always buying the dip. I'm starting to become a little bit concerned about about MicroStrategy. Should we become concerned about MicroStrategy? Should we become concerned about one entity buying so much Bitcoin? Like, in the future, are they going to sell all of this Bitcoin and then dump the price on us one day or something? Are we really excited about one corporation buying a ton of Bitcoin? Like, it's sort of raising the price and keeping the price afloat a little bit for us. And I think we can be a little bit excited about that in the short term, but are we actually excited about a centralized authority like a corporation, which we tried to get away from with Bitcoin? I mean, it's sort of like the antithesis of Bitcoin, buying Bitcoin. I don't know. I actually don't know, but they did buy the dip. But this article is after losing 60 million in Bitcoin, El Salvador's president buys more. So another person buying the dip here. So this is a country buying the dip. So either way, I guess everyone's buying the dip anymore. Corporations, countries, everybody's buying the dip. President of El Salvador, Nayib Bukele. I don't know if I'm saying that right. I never know if I'm saying that right. You guys get the point, though. Must truly believe in Bitcoin or love losing money. Undeterred by the massive losses incurred by his strategy of using public funds to invest in Bitcoin, Bukele announced last night that he spent another $1.5 million to buy 80 Bitcoin at $19,000 per coin. El Salvador bought today 80 Bitcoin at $19,000 each, the Central American politician tweeted. And he tweeted this: El Salvador bought today 80 Bitcoin at $19,000 each. He said, hashtag Bitcoin is the future. Thank you for selling cheap, with an emoji. So I'm not sure what to think about that. I suppose good for you, El Salvador, even though it's public funds. So I hope that it goes up in price for the people of El Salvador, I suppose. If it just tanks to like at $10,000, then that's just all the El Salvadorian people's tax-paying money that's just tanking. So it could be a good thing. We're about to find out. Welcome to the world of Bitcoin, everybody that lives in El Salvador. You're just sort of forced into it now. It's a wild ride. It's fun. We're having fun here. Moving on to CoinMarketCap, still under $1 trillion market cap. Really reminds me of 2018, even though we're still higher priced than 2017's all-time high. I mean, approximately 19,500. I don't remember what the exact all-time high was. It was something like 19,000. We're higher than the all-time high price in 2017 of Ethereum. Now, Ethereum did get higher than this in 2018 in the first week of January, and we have a way larger circulating supply now. Yet we're still under $1 trillion. So that means just all these coins are garbage. It just means we have so many nonsense coins. It means we have so many BNB coins, so many tokens, so many DeFi coins that are just total nonsense. It just means that we are back to under 1 trillion, just like we were in 2017. We have a greater circulating supply of Bitcoin. We are at the same price approximately, and we are higher price than Ethereum, technically, because Ethereum in 2017 in December, when Bitcoin hit its all-time high, was something like $400 to $700. So technically we're higher with a higher circulating supply. So the market cap is higher, yet we're not above $1 trillion, which is just really mind-blowing to me, because where did everything else go? That means just the market cap got stripped from everything else, and it's just gone. I mean, we used to have like Vertcoin near the top. We used to have just all these coins like Zcash near the top, and Zclassic and Zencash and stuff like that. Monero used to be higher, and all these coins. So somehow we have 2, 3, maybe 10 times, maybe 20 times the coins and tokens that we did in 2017, at least. I mean, we had like 2,000. We probably have 20,000 now, maybe 40,000 total tokens and BNB and stuff like that. Yet we're not above 1 trillion. So it's just amazing how little market cap all of those additional extra tokens that we have, that are above 2,000 tokens, that we had from 2017 are. So it's just they're just useless. They're basically all just useless. They just died. They have no market cap to speak of, that would have any sort of impact on the overall major market cap of the entire crypto market cap. So we're just riding on Bitcoin and Ethereum and like the top maybe 50, maybe 50 here, or so. Maybe 100. You could argue the top 100, and maybe it was like that in 2017 too. But for the most part, maybe the top 50 coins are the only reason we have near 1 trillion market cap. If you even want to go that far, I would say maybe top 30 before you start to get under like a billion. The top 7 before you even get under a billion, top 10 maybe. But that's all I have for you guys. I hope you enjoyed it. As usual, make sure you like and subscribe to help support the channel. As usual, I'll see you guys next time.